If it's all right, I'm going to pass over to you. We've got Adam, who's the head of quantity surveying for Adair, and Mark, who's recently become the MD of Adair, a fantastic move as well. And they're going to share a little bit around what's happening in the construction space. So over to you, gents.
Yeah, cheers, Alex. Thanks for that. As some of you, well, hopefully all of you are aware, Adair construction consultancy, been going 27 years. Core services are project management, quantity surveying, building surveying. We do a lot of project monitoring and act as an employer's agent and contract administrators on a number of development projects. But like Alex is saying, and I expect a lot of you are aware, the rising cost of raw materials and labour shortages is a significant concern within the industry at the moment. July alone saw a 4.5% increase in materials generally across the board, and a 23% increase in imported timber, which, as I say, you know, is an obvious concern when you're undertaking a residential development. Over the past year, we've seen you know, we saw the fluctuations in plaster and plasterboard, which was well documented, but this is due to supply and demand pressures, but this seems to have leveled itself out now. But the past year has also seen imported timber, and in particular plywood, has seen a price increase of 82%, sawn and planed wood 64%, steel prices are up 65%. Brick manufacturers now, again, whilst their shortages have been overcome, they're still looking at a 10% increase, and so generally materials are up 20% over a year, which for a construction development, which will typically take 9 to 15 to 18 months, depending on the size, that's obviously a big hit on your margins. We are seeing, you know, there's shortages in HGV drivers, which is contributing to long leading periods for materials. We're seeing precast floors are being quoted at 16 to 18 weeks as a leading period, when this was typically 4 to 6. We've seen timber frame companies being put on quotas, and which is affecting their delivery. And only this week we were hearing of concrete truck drivers considering strike in October, and the you know, the ballot for the union representatives is being held as of Friday. So yeah, there's considerable costs, and Adam can go into more detail on labour shortages and the implications of Brexit.
Thanks. I think starting with like direct construction labour shortages, I mean, we had anticipated shortages due to Brexit, which seem to have been accelerated because of the pandemic, and the shortages are straight through from skilled tradesmen all the way up to management level, affecting both the package and the prelims costs. I think we've got reported earnings increases of around 5%, which is up to the spring, and there's expectation that there's going to be more increases on the way. The market is reacting in terms of trying to recruit and train new labour. As it's a slow process, we're seeing leaders now really lobbying the government to try and relax immigration rules for relevant construction workers, and it's yet to be seen if that's going to have any effect. But overall, what does this mean for developers? One way to decipher it is to look at what the inflation view is across the market, looking at BCIS and a number of construction consultancies, especially operating in London. They all seem to agree that we had negative inflation in 2020, 2021, 2022, 2023. There is agreement that it's all going to be positive inflation, and it's going to reach 3 to 4% per year. The only disagreement is how quickly it's going to get up to those levels. But most agree by 2022, there's definitely 3 to 4% inflation year on year following that. How do we manage these challenges? Well, from the outset, we need to get the due diligence at acquisition right. We need to make sure that we're getting the right schemes put forward with the right estimates. Cost plans need to not only be robust, but we need to really push the value management and engineering from the outset to create that better value. When it comes to procurement, really need to, I mean, this was kind of expected straight after Brexit. There's a lot of nervousness in the contracting market with the expectation of issues with material supply, short-term issues potentially. And we started seeing like bespoke amendments coming into contracts around who takes the risk. Those sorts of amendments are a lot more matured now. There are ways of managing the way through to limit the exposure of developments, which we can potentially talk about on the 23rd. But risk management really needs to come to the forefront at the moment, I think.
Yes,
Adam,
go on.
sorry, Mark, go for it.
No, I was just saying it's. I think all the parties to a construction contract are aware of the challenges, and it's about raising those challenges early, and trying to deal with them as best as we can.
So on that note, and we're all about solutions. Obviously, we know there is a considered problem, and it seems to be growing. David, Piragash has come in with a question as well, which basically is, in terms of the for SMEs, can they take advantage of international arbitrage? And I'm not going to pretend I understand exactly how that would work. But Piragash says, for example, lumber prices have fallen in the US, and I heard that they were up 287%, but have now actually gone back to a more realistic level. And Piragash says, does intentional procurement have a place in the toolkit, or is it unrealistic for smaller developers?
I don't think it's really applicable to smaller developers. Those prices, as I say, we saw it with plaster and plasterboard. Those prices will settle. It's just a matter of time. And the industry is basically saying it's about a year, and that was about from June this year. They were saying they reckon it will all be back to, you know, the supply issues will have sorted themselves out, and so by about June next year, then we should be back to some form of normality, or we shouldn't have these fluctuations that we've got at the moment that we're having to deal with.
Okay, we're going to have to seriously hunt down those crystal balls people keep talking about. Let's have a look. We've got a question from David Kemp as well. So these costs need to be built into affordable housing viability appraisals where relevant to a scheme by taking as conservative approach to current build costs and contingency rates as possible. So more of a suggestion, but obviously making sure that's factored into the affordable component of any sites that are obviously that's applicable. Anything to add on that, Mark or Adam?
No, I think that's a very good suggestion. You need to be confident that you've got inflationary figures and contingency figures within your sums to make sure that you don't enter into any form of development whereby you're gonna lose out on. Okay, perfect. If there's any other questions, obviously please do connect with Mark or Adam at the end of the session. We obviously they have their TrustedLand profile. You can connect them through there, and we will have the breakout rooms available afterwards. For any of the real developers that are heading to the land forum on the 23rd of September, you will also get the chance to present in advance your next scheme or development you're working on, to have a session with Adair to run through any sort of snags or red herrings within your current costing plans as well. So you have a chance to do a quick drop-in session, a clinic with the Adair team on your scheme specifically. So if you are heading to that session, or if you want to, that's one of the benefits you'll get from joining us on the day. But Mark and Adam, thank you very much for standing in the spotlight, for sharing with us. And yeah, keep those solutions coming, because where everyone's going to need them, a year down the line or not, we want to make sure we're ahead of this.